Good morning, everyone. Today is the 22nd of January. Yesterday we have had quite a busy day, around 700 points daily range after Davos remarks by Trump. But leaving aside the fundamental part, the technical aspect of the market was there. If we look at what I've said yesterday, we were looking at the market to go down into this balanced price range, which is something the price has done. Retested the middle of this balanced price range and coming back up into the range here, and that's in line with the overall higher time frame narrative. It's a bullish market. If we look at this weekly chart, still a bullish market, no sign of recession or whatever else. I've seen some commentaries that the bear market is coming. No, look at this. So bullish, and there it is, retest of the balanced price range, going back up. Now if we look at what happened overnight since yesterday, so retest of that fair value gap, price is coming back up into the range, and if we are to assess where we are now, we look at from this low that was formed, we go all the way up to this high, we are at equilibrium of the range, and we are we see that we have this bullish fair value gap on the 4-hour. We have this balanced price range that was retested, and practically we are stuck between them, because if we look at what might happen here, if we have this high, this candle high, we have this line, we have this, right? So for me to have a bullish bias for this day, at least for this session, for London session at least, I would need to see price actually displace higher, which is something that doesn't happen at the moment. We have this previous day high, this is the previous day high, and we have so far an inside bar. So if I go to the daily chart, there you go, it's an inside bar. So for me to have a bullish bias on this day, I would need this candle to properly displace the high and continue. To have a bearish bias on this day, again, it's hard to commit to a bearish bias either, because it's so far an inside bar. What we can do is to mark yesterday's close. Yesterday's close, that might be a liquidity area. And let's go to the 4-hour chart. Let's mark this yesterday close. Yes, close. And what else can I do here? Previous day high, I already have it marked. So what I can additionally do is to mark this, because I'm stuck between this imbalance and this imbalance. I can go ahead and mark this high to this low, and this is the range I want price to come out of, for me to have a clear picture, a cleaner picture of what the market wants to do. So overall weekly bullish, 4 hour bullish until the market tells us otherwise. And for the market to tell us otherwise, it would be at least for price to come down into yesterday's close and continue lower, clearly continue lower. So that's it for now. I would go also to the 50-minute chart. There you have it. This is yesterday's close. We marked here, and this is previous day high. This is the range we've drawn up, and this is the weekly equilibrium here. I will just remove this because it's too cluttering. Yeah, and this is yesterday's close. And what the hell is this? There we go. 1 second. Yesterday's close. This is not yesterday's close. This is the yesterday's close. Yeah. And there it is. That's the plan for today. So we need to wait for price to actually make up its mind. As it is now, I would really like to see price looking at this 15-minute chart. I would really like to see the market come down into this imbalance, and for then make its way back up and completely close this gap. So I would look for that a manipulation into this gap for a higher move. But if we look here from yesterday's close into this gap, it's 100 points. So that could also serve as a good area to trade. However, we have had all of this displacement, so personally I'm leaning bullish. I would not trade. I likely would not trade the retracement into this. That's it for today. Wish you good trading. Bye.